I built up a 7-figure stock portfolio thanks to my online businesses. They're made up of bonds, terrible stock picking, ETFs, and some robo advisors. So today I'm going to give you my thoughts on why I invested in certain things, the poor choices I made, the great choices I made, and yeah, let's get started. One quick thing is I actually send out a monthly net worth update, which keeps you guys up to date with my portfolio, how it's doing, and yeah, feel free to sign up for the newsletter. And finally, if you guys have any questions, please drop them down in the comment section below and I'll answer them in the next video. So at the very end of this video, I'll have some questions answered. So first up, we actually have Wealthsimple, which is a Canadian robo investor or whatever. I don't know what they're called. Anyways, I set the risk level to 10. And the reason for that is because my time horizon is quite long. I average in quite aggressively into this. I believe it's 16K a month. Let me see if I can find out. Oh, it's actually 18K a month. 18 or 19K a month. So that's pretty aggressive. And this is Canadian dollars, by the way. And yeah, so the return is 4.5%, but I think that's throughout time. And yeah, the performance isn't great, but we've been in a down market, so I'm okay with this. This is kind of a set and forget it type of thing, so I don't really want to think too much about it. It does okay. It's purchased weekly. Not much to say about that. Let's take a look at their holdings. So it's made up of U.S. large caps, so I guess a lot of the S&P 500s are in here. By the way, guys, I don't know much about stocks or ETFs. I'm just trying to diversify my holdings. So U.S. equities like 30%, international equities 22%, emerging markets 15%, Canadian equities 11%, and global equities 11%. Fixed income's also at 11%. So it's just like bonds and shit. So bonds got clapped. Everything else has been doing relatively well in terms of performance. Gold is up. So next up we have my non-registered account in Wealthsimple. I used to treat this as my YOLO account because I thought I could, if I made any losses there, I could actually write it off. But since the bull market ended, I've taken a more dollar cost average approach and less of the YOLO ape into stupid trades approach. So let's take a look at like some of the trades I made in the past. Absolutely stupid. That's why my account is still like minus 9%. God, I was so stupid before. But yeah, let's look at my stupid trades before. So I bought and sold like, these are just sells. So these are just me getting out of certain stocks. Roku, I think I lost some money there. Gap, I don't know why I bought Gap. Air Canada, which is a shitty Canadian airline. Yeah, so Shopify I sold. I don't know why I sold. Should have kept that. I don't even know what stock this is. Nokia. Yeah, I don't know. These are just some awful purchases, and I ended up selling them for a loss, probably. I think Carvana actually made some money. That's quite interesting. Yeah. Some of these, I don't even know why I did them. Anyways, let's look at the holdings. So right now, we got the S&P 500 averaging in. I think we are averaging in at any way I can see. I believe it's 2K a month each. So 2K a month. All these is in Canadian dollars, by the way. 2K a month into S&P 500, 2K a month into growth ETF, 2K a month into total market index ETF. I have obvious. It's clear to you guys, I'm sure, that I have no idea what I'm doing. So all-time return. Yesterday was an up day, so I just broke even. I've been doing this for 3 months now. Keen to see where this takes me. Anyways, on to my USD holdings. I ended up just selling everything, all my stupid US stocks, and then just bought Microsoft, and we're up 5%, so I guess we're back, baby. All right, next up, this is my primetime YOLO stupid trades account. Everything's in Questrade. I used to think I was Warren Buffett, day trading like crazy. I had like TA. I was drawing lines and shit, thinking I knew what I was doing, but I definitely did not. So let's talk about what I have in this account now. So probably positions is the best way. What I have right now, this is a non-registered personal account, so this is my own money. So more recently, I purchased something stupid called better.com. I don't even know what it does. It's like insurance thing. I saw it like drop by 80%. I liked the domain. I was like, better.com is a great domain. Let's buy some. Let me try to cash this falling knife. Obviously, I'm down 62%. And then I'm down 27% on Cloudflare. And this is after it went up, after earnings. And finally, I have cash.to, which is, this one's a safe one. This is pretty much like a bonds ETF. It pays out, let me see. Yeah, it pays out like 5% interest or yield every month. Not every month, like annualized 5%, but it pays out every month. So yeah. So this is my corporate account. We'll talk about that last. So we can talk about my TFSA, which is my tax-free savings account, which is a Canadian thing. Let me just bring your guys' attention to the right side. That's what I look at the most. So in first place in terms of like holdings, I have Palantir, which is up 63%. I bought this at IPO, so I feel like a bit of a genius right now. I sold quite a bit. So one of the things saving this account is actually Palantir. So what I did was I purchased at IPO 2,000, I believe like 2,000 shares in Palantir, and then it went up by 30%. I sold off 1,000, held 1,000 until a couple weeks ago. Palantir rocketed again. Sold 300, and I'm just going to let this ride until I retire. Next up, we have Airbnb. I was dollar cost averaging into this. Thought, hey guys, I use Airbnb all the time. This can't possibly go down. Also not true. Went down a ton. So I'm down 23%, 3K, 3.5K. Next up, we got Royal Bank of Canada, a big four bank in Canada. This is actually a rock solid bank with like crazy balance sheet. I made sure of the balance sheets because after all the regional or smaller banks in the US went under, I had to read up on like how safe Royal Bank of Canada is because I have all my shit in there, and it turns out Canada is like, Canadian banks are really safe. Next up, I got Square. So the funny story about Square is I had a thesis during COVID, and I was checking Google Trends with Cash App versus PayPal or Venmo, et cetera, and Cash App was just so far ahead of Venmo, PayPal, all like the mobile wallet products. And I was like, all right, this is a sure thing. This shit's going to moon. Turns out I was wrong. Let's look at the graph. I couldn't be more wrong. I'm down to 78%. So yeah, I'm pretty sure I purchased like here. I bought the dip or something like that. Stupid. I don't know. Should I sell this, cut my losses, buy S&P 500 and just chill? Or I don't know. What do you guys think? So VFV is just an S&P 500. Just after me getting wrecked several times, I still have some cash in here. I got 6K US and 1.3K CAD, so I can still average in a bit more. I've taken a less stupid approach moving forward. Except I have Granite Real Estate Investments, which is commercial real estate in Canada. Obviously, I'm down a lot. Let's take a look at, I think they paid quite a bit of dividends. That's why I held them for so long. Yield 5%. Yeah, that's why I held them. It's more of like a why not. But 6K market value, it ain't much. Let me tell you that. Next up, TD. It's just another big four bank in Canada. They pay relatively good dividends. So held them for a while. I'll continue to hold them 4.8%. Just see what happens. Microsoft, of all the things I should have purchased, it should have been Microsoft. It's up 40%, but I only bought 2 shares. What is wrong with me? Anyways, onwards. Finally, we have an RSP. I don't even know what it stands for, but what it is you can defer taxes in this if you have payroll. So I used to pay myself payroll and try to defer taxes. But man, as you guys can clearly see, down 80%, down 60%, down 40%, down 8%, down 15%. I should have just kept it in cash, guys. But anyways, stupid. Microsoft, as you guys can see, is my only winner, up by 18%. Shopify, even after it going up by freaking like 30%, I'm still down 7%. So yeah, this is pretty embarrassing to look back on, but it serves as a lesson moving forward. All right, it's time to go over my largest account, which is my corporate stock portfolio. Yeah, I used to YOLO a line here. This is the account where I hit GameStop options, I believe. And I think it was like the most amount of money I've ever made in my life within 30 minutes. It was like 60K or something. Anyways, so first up we have this like USD cash ETF. It just pays, I think 5% annualized, but it's pretty tax efficient because what it does is it just grows in value by 5% every year instead of paying you out dividends, which, as you know, dividends is taxed as income. So this is a slightly more tax efficient. So you can just take the capital gains instead of that. Next up, we have Tesla, one of my greatest stock investments of all time. So I bought Tesla a long time ago, and I believe I sold those GameStop call options into these Tesla stock. Yeah, it was like 80 something K. Yeah. Sorry, it was like 50 something K I made in a day. So I just made like a lot of money through there. Not saying I'm a genius, it's just pure luck. Next up, Walmart. I think during the first downturn of stocks, I was like, hey, tech stocks are getting murdered out here. So let me buy some boomer stocks. So the boomer stocks include Walmart. So I got 24K of that. Canadian National Railroads, which is an incredible stock, like very resilient, 33K. I used to think Microsoft was a boomer stock, so I bought a lot of that. So that's up quite a bit. But a lot isn't, 17K really isn't that much. What else? I got Coca-Cola, which is up 10% at 8K, 8.5K. Should have bought more of that. And yeah, those are my boomer stocks, as well as the bank stocks. TD, I got 22K of that. It is down. TD, yeah, I'm down 3%. Oh yeah, and as well as this telecoms, it's called TELUS in Canada, down 8%, but they pay 5% annually. So I guess if you're averaging out, we're about even Stevens. So not much to say about this. I just remember I bought Google and Microsoft at the same time because I didn't want to be wrong about who's going to win the search trade. So I just bought both of them, and it's obvious Microsoft has won since then in terms of returns. And I used to check out Roblox search volumes, and I was like, this shit is so the future right now. So I bought a fuck ton of it. 15K of it, and now the value is down to 7K. I'm down 57%. I may recover from this financially, but I'll never recover from this mentally. Same thing with Square. I talked about it already. Yeah, so that's my stock portfolio, guys. Made a ton of mistakes. Don't do what I did. If I were to do everything again, I would probably just average into the S&P 500 and focus on my business. I used to think I was a day trader, which is absolutely stupid. There you have it, guys. If you found this interesting, leave a comment letting me know down below and share this with your friends. I don't know. Is this even something you share with your friends? I just need more views to keep me motivated. Anyways, if you guys just wanted to hear about my stock portfolio, I'm going to go over some questions that you guys left in the comment section from previous videos right now. So if you just want to see my stock portfolio, now's the time to leave. All right, so answering you guys' questions. If you guys have any other questions, please leave them down in the comment section below. And I'm just gonna go through this rapid fire because we're at 15 minutes already. I don't want to keep this going for too long. All right, how do I go about anchor text selection? I go super branded, heavily branded, so like 70-80% branded or partial branded match. I never go too hard into like best XYZ anchors. That's recipe to get clapped. What do I think about having an e-commerce store built out with products but not have them in stock just to build a brand and, you know, Google will like it? Pros and cons. Probably don't do that. If you're going to do that, might as well just stock some drop shipped items in case anyone ever wants to purchase, right? Like why would you just have them out of stock? Next up, Mo asks, thanks for the far and away updates. You're welcome. What is the link building strategy for this blog? We didn't really do any link building. I think we did some PR stuff in the past. Not much. What's the upfront cost on content to get 800 posts ranked? So we actually migrated a lot of content from a site that was penalized before, and we manually moved like 800 plus posts over. So it was not AI content, but yeah, appreciate your ongoing comments. Joseph asks the same thing about Far and Away blog about the link building. I answered already, didn't really build links. SEO case study asks, when selling guest posts, do you sometimes buy them from other providers? So I did used to do that quite a bit. We try not to because we already have a huge list. But from time to time, I will tap friends in the industry on the shoulder if we're unable to fulfill certain things. We just ask them like, hey, if you have any sites for us, give me some contact details. And most of the time they would do that because no one's going to bother me or try to steal a client over like $50 or a couple $100. It's stupid. What keyword research methods did you do to find so many buyer intent topics? I'll do a separate video on this. This can't really go through this, but in general, it's just using Ahrefs with best in the keyword. Finally, SEO Hack asks about my local SEO strategy. So this one's quite interesting. I do map embeds as well as you can add schema like NAP schema into PBNs. So I believe PBNs, in my opinion, from what I've tested, PBNs are stronger than citations because they're PBNs. Citations barely get any quote unquote link juice. So I would try out PBNs. If you guys want me to do a bit more in depth about this, I could do a video on this. All right, that's the video. If I answered your question or if you liked this video, all I ask for you is to like the video as well as leave a comment. That's it. All right, that's all you have to do this video. Thanks a lot, guys. I'll see you tomorrow.